Hi, I'm Russell Smith and I'm going to talk to you today about the biggest subject in town, which is of course the budget yesterday. So this was the fourth budget in 12 months and actually the year's been amazing. The budgets have been loads of stuff kicking off, things changing, and yesterday was no exception at all. A really big budget for small business. So what I'm going to do is I'm going to tell you the 6 things I think you need to know as a small business. And I'm going to blog about this as well, so I'll give you a bit more detail on my blog. But I'm going to just give you here the summary of, I think, what are the 6 most important things to know about this year's budget. Okay, so number 1, corporation tax. So this is the tax that you pay if you have a limited company. It's chargeable on your profits. At the moment, it's 20%. And the news a few budgets ago was that it was going down to 19% in 2017 and down to 18% in 2020. Well, the big news, and I don't think many people saw this coming, was that actually in 2020 it's going down to 17%. So we're at 20 now, it's going to 19 in 2017 and then going down to 17%. So you're really going to get a 3% difference on your corporation tax in your limited company. Now, if you're, let's think, if you've got a profit of say £50,000, well, you're looking at a corporation tax saving of £1,500. Obviously, if you've got profits of 100,000, you're looking at 3,000. So, you know, it's a significant amount of saving. So, you know, I got reasonably excited by that, and I think you should too. So it's a good saving. So number 1, corporation tax going down to 17%. The second big thing, I think, for small business is the business rates relief. So if you get an office, a serviced office or rented office for your business, you have a small business rates relief, which is basically a band that prevents you from paying full-scale rates, business rates, which are, you know, reasonably expensive. They've increased those small business rates relief up to £15,000, so you could be seeing a reduction in your rates, which is great. And even if you are expanding as a business, your business rates relief may even cover that expansion, meaning that rates, that line on your profit and loss account, may be going lower. I'll tell you now that the difference between having small business rates relief and not having it is quite huge. So I do think you may see quite a big deduction and something to be very pleased with. Okay, third thing then is capital gains changes. Okay, so at the moment, just to recap, capital gains are the tax that you pay on when you sell something big. Okay, so something like a property or an investment, shares, or a piece of art or something like that. Well, interesting this actually, because the rules at the moment are if you are a higher rate payer, which is over about £40,000, you're paying the capital gains tax at 28%. So it's pretty high, 28%. It's 18% if you're only a basic rate payer. Of course, you do get £11,000 free as well, but so it's only over and above that £11,000 free. But you know, 28%, 18%, quite high. Well, that's gone down quite significantly to 20% and 10% at the moment. So that's really great news as well, especially if you're about to sell some shares or sell something big. The only major downside to that, which is a bit disappointing, is it's not going to apply to residential property, which is a shame. Because actually I've been talking about property a lot recently and about how the government have made it less advantageous to buy a property. And I thought upon hearing this, great, this is an amazing example of maybe buy a residential property and get capital gains taxes low. But sadly not, it doesn't apply to residential property. So it's capital gains tax going down to 20 and 10%. Okay, fourth thing we've got is if you are self-employed, you pay Class 2 national insurance, which currently is £2.80 a week. That's completely being scrapped, which is again interesting. It was going to be incorporated into the main personal tax return, the main tax system, but now that's completely disappearing, so we don't have to worry about that at all. So good news if you're self-employed. Fifth thing, not a surprise this, is that if you take a loan from your company, you have 9 months to pay that back after your year end, okay? So usually you would take dividends and a bit of salary from your limited company. In some cases, you would take a loan. You'd take cash out and you'd class it as a loan. You've got 9 months after the year end to pay it back. Now the old rules, or the rules that they are now, is if you don't pay it back within 9 months, you get charged with another 25%. You just get hit with 25%. Not technically a tax charge, because you'll get that back. if you pay the loan back. Bit of cash flow timing, obviously, but it's you get it back. That's going up to 32.5%, which is making loans from your company slightly worse. So if you're thinking about taking a loan from your company and paying it back, make sure you do pay it back within 9 months, because you get hit with this 32.5%, and that's from April. Now, if you don't pay it back in time, you get hit with that 32.5%. Fine, pay the loan back and reclaim the money. But I would say, bit of hassle, probably don't do that. Okay. Number 6, and I'll save the best to last. And to be fair, I should have put this as number 1. There's a reason why I haven't, and I'll tell you why. I think the biggest thing of this budget is the lifetime ISA. I like Martin Lewis from MoneySupermarket.com, and he said that in 20 years' time we'll remember this day when the Chancellor created the lifetime ISA. Now this is great. This is basically an opportunity to pay in up to £4,000 a year, and the government will top that up with £1,000. So you're literally getting £1,000 free from the government if you can put in £4,000. Obviously, if you put in less, you'll get less. It's about 20% of what you put in, or 25% of what you put in. Great news. The catches are you have to use that money for either your retirement, for a pension, or you can use it to actually buy a property. So it's kind of like a hybrid between the Help to Buy ISA and a pension scheme. But it's very flexible, and you get to do the £4,000 every year, and also they've increased the total ISA amount to £20,000. So quick recap on ISAs. ISAs are either cash ISAs or stocks and shares ISAs. You can pay money, receive interest, but not pay tax on the interest, and therefore build your pot better. Now I think this is amazing, because I think that people, especially people of my age and a bit younger, are not thinking about the future, not thinking about pensions, not thinking about saving. And I think anything that the government does to make people think about saving is great, because we know that the state pension is not going to keep you in the comfort that you're used to when you're old. And certainly I don't want to be old and grey and have no money. So pensions and savings are something very much on my mind. So I would really encourage you to look at this lifetime ISA and consider an open one. Now, they're not open until 5th of April 2017. But I think there'll be enough fanfare in the media to remind you that this thing is happening, and certainly I will remind you as well. However, there is one catch, and this really pains me to say. You have to be under 40 at the time of 5th of April 2017 to get a lifetime ISA. Now you may ask me, what does under 40 mean? And it's interesting. If I said to you, count up to 20, you would probably include the number 20. However, when people say under 40, they are not including the number 40, sadly. So I can tell you that I am turning 40, I know it's unbelievable, I'm turning 40 next year on the 16th of February 2017, which means that on the 5th of April I will be 40, therefore not able to get a lifetime ISA. So if you are 40 or over, at that point you will not get one. It's very, very sad. I'm absolutely gutted. However, that's just my problem, so let's just move that aside. If you are looking at saving, I would strongly encourage you to look at lifetime ISA. I think it's fantastic. Now that's the 6 things that I've got for you today. So we've got corporation tax going down, capital gains tax going down, we've got Class 2 national insurance completely going, we've got the loans to directors 32.5%, we've got the lifetime allowance, ISA and the allowance going up, and the business rates going down as well. So all good things. I've put a few more things on my blog, a bit more detail on it if you'd like to read that. So that's on my website, just click on blogs, you'll see that. So Russell Smith, if you've got any questions on the budget, please email me at russell@rsaccountancy.co.uk. That's russell@rsaccountancy.co.uk. Thanks for listening.